Okay, can you hear me?
Yes, I can hear
All right. Thank you.
you.
So we'll just go ahead and start the class. Um, Once again, good evening and welcome to class. So
Good
today,
evening.
yeah, we are going to do a little bit of backtracking, what we did in the last class. So the last class was purely candlestick. Uh, we'll talk about the anatomy of candlestick. Uh, what, why is the candlestick important? Okay, in our trading journey, and then of course we talked about different type of candlesticks. So just like a summary, why there are so many types, so many candlesticks. There are five key candlesticks, okay? And this is not from me, this is from MTI. Okay,
Yeah.
you can see the name of the company there, Market Traders Institute. Now, MTI is a renowned trading company, okay? And when you talk of tools, when you talk of technology, they have the best. At
Okay.
least, at least from what I have seen, they have the best, practically the best. And
Mm.
they conducted a research, and that research was to see or know of all the candlestick formation and patterns, which of them are the most occurring in the market, which of them are more frequent in terms of occurrence in the market. And they narrowed it to these five. Okay. So we have this five for bullish and we have this five for bearish. So you as a trader, what you want to do is you want to look for these five candlestick anywhere they appear in the market, and you want to combine it with structure. Okay. So you want to combine this candlestick with supply zone and demand zone. Okay. So for instance, this first candlestick is the bullish shooting star. So every of the candlestick, anytime you see a candlestick formation, no, you need to understand that there's a difference between candlestick and candlestick formation or candlestick pattern. There are two different things. Okay.
Okay.
The
Mm.
candlestick is just a tool, by which the market exists. Okay, so the candlestick can be line, a market can be line chart, it could be bar chart, it could be candlestick chart. But now of all the tools available to trade the market, the second candlestick is the one with the most useful information. Why?
Mm.
Because it tells you the high, the low, the
Mm.
open, the close, the volume of transaction that happen in that candlestick, which is the body. So that makes
Mm.
it very important, right? So
Yeah.
while there are candlesticks everywhere, there are candlestick pattern and there are candlestick formation. Now, candlesticks, candlestick pattern or formation could be in the form of a single candlestick,
Mm.
two candlesticks, three candlestick, and more. Okay. So in this
That's
instance,
candlestick pattern, yeah?
yes, candlestick pattern. Candlestick pattern and candlestick formation are basically the same thing. Okay. What it means is that these are candlestick that enable you to make a decision whether you want to trade the market or not.
Mm.
And you need to also have it in mind that every time you see a candlestick formation, the next thing that comes to your mind is U-turn. That is, the market is going to make a U-turn. So the market is coming down, and then a candlestick formation forms. There's going to
Mm.
be a reversal. Every candlestick formation gives you a reversal. They turn the market. They turn the market. Okay. So the
Mm.
first one here is the bullish shooting star. When you see the bullish shooting star, anytime it appears, the market is going to turn. Okay. So what MTI has done here is showing you how you can trade each of these candlestick pattern solo. Okay. So
Mm.
this is not complicated analysis. You just see this candlestick pattern and you want to know whether it works or not.
Mm.
MTI is telling you that anywhere this candlestick appear in the chart,
Mm.
buy this candlestick and place your stop loss 10 pip below the lowest wick of that pattern. Okay, so you see shooting star, buy, place 10 pip below. You see morning star, buy, place stop loss 10 pip below. You see a piercing line, buy, place stop loss 10 pip below. Okay, now
Yeah.
if you buy every of the morning star or every of the shooting star you see, you are going to lose. Okay, because a lot of them are not going to appear at area of structure. A lot of them are not going to appear at demand level or supply zone. Okay, the ones that are most effective, the ones that are most the best that you can get are the ones that appears at supply zone or demand zone. Okay, so if you see a shooting star, a bullish shooting star in a demand zone, you see a bullish shooting star in a demand zone, yes, that is a good indication that the market is going to buy. If you see a bullish shooting star in a supply zone, that could be a deception for you to buy when the market is actually going to sell. Okay, what do I mean by that? Let's look at the chart. Let's come to the chart for instance. This is the chart, right? Now, I mean, it doesn't matter the time frame that you are in. Okay, so let me take 4 hour here. Okay, so if I come here and I say, boom, this chart out. Now, this place, you see this place where the market got to before the market went up. This between the body of the candle and the wick of the candle and the highest candle out of these two. So you have a bearish candle and a bullish candle. Yeah. So the whole of this place is demand zone.
Okay.
Do you understand?
Yeah.
Let me take out the Akihanshi so that you will not be confused. Okay. Okay, don't worry. Let me use MT5. MT5 is okay. Don't worry. Let me just apply it here. Apply it here. So I go 1, 2, 3 like this. All right. So this is your candlestick. So with this your candlestick, what this? I said now this movement has already happened, right? From here to here, this movement has happened all the way from this point to this point. This is an existing movement. Now I'm telling you, as if knowing fully well that this movement has happened, from this button that this movement happened, the body of this candle and the wick of this candle, ideally, this area is your demand zone, right? This is your demand zone. This is remember, this is 2 candles to the left, 2 candles to the right, right? So this is
Yeah.
a support. So between the wick and the body of the candle is your is your is your zone, is your support zone. Okay. And I'm saying in order for you to also extend that support zone,
Yeah.
these two last candle, these two, if you look at all the candles here, okay, let me do something. Let me remove the wick from the candle so that you understand what I'm saying. So now I'm taking out the wick. No wick. Wick out. Okay. Now there's no wick. So where is the least candle you are seeing? This is the least candle, the lowest. Okay. Now I said between this lowest, the body of this lowest candlestick and this wick, the lowest place the wick got to. Between the lowest point the wick got to and the body of the candlestick is your demand zone. Okay. But now there's such a thing as order block. I don't know if you heard of order block. Okay. There's a concept called order block. Now, so this candlestick, and this candlestick, they could serve as order block. What is order block? Order block is simply a place where the market will do reversal, where the market gets and it does reversal. Okay. So I can extend my demand zone to include here. So from this top of this candle all the way to the wick, I can say the whole of this place is demand zone. So
Mm.
whenever the market comes back into this zone,
Mm.
I start looking for reversal. And what's the reversal I'm looking for? I'm looking for that reversal that will break the trend line. Okay, so this is a trend line. Stop. That's the trend line. So ideally, we wait, and this market will do all this movement, and then break this trend line.
Mm.
When the market breaks this trend line and tests this trend line,
Mm-hmm.
then you have a high level of assurance that the market is going to buy. Okay, but
Yeah.
aggressive trader, if you like what happened today. So if I put this chart back, okay, so that you can see the wick. Now you will see that this candle, this one,
Mm.
is a hammer, right?
Mm-hmm.
This one, hammer candle. And this hammer is coming from a demand zone. Look at
Mm.
it. So based on this hammer coming from this demand zone, you
Mm.
can say that this market is going to buy, right? And
Mm.
then you can take a buy and put your stop loss below this low. You can be your stop loss below this low here, okay?
Mm.
And expect the market to buy, okay? So
Mm.
that is one of your reason for entering the trade, okay?
Mm.
So you wait for the market to come back to a demand zone, or the market to come back. For instance, now this area now becomes a supply zone, this area. So
Mm.
whenever the market gets to this point, we want to see if the market will give us a sell candlestick. If the market gives us a sell candlestick formation from that zone, then we have to take a sell trade. Okay.
Mm.
No, I told her to off it. It was dragging the jet. I think this washing machine was working. Okay.
Mm.
So if you can identify the zones, so and of course, the higher the time frame, the stronger the zone. Okay. So now
Mm.
one of the trick that also happened in the market is that this coming from this demand zone
Mm-hmm.
mean a buy in the 4 hour, right? But when
Mm.
you switch to the daily, you look at that zone. Is it actually a demand zone on the daily? Well, the good thing on the daily is that it's also showing that this area is a support.
Mm.
Okay, so to some extent, that helped to validate, this trading on the 4 hour. So there's a likelihood that this trade will play out. Of course, you can see that the market has already done a double top here. Okay,
Mm-hmm.
the market has already done a double top on the daily.
Mm.
Okay, so if
Mm.
the market is going to go from here back to this double top, that would be a triple top. Okay,
Okay.
and when the
Mm.
market gets to this triple top area, this one, the zone is a little bit big. This is the zone
Mm.
here to the week. Yeah. So if the market goes and break through this entire area and then
Mm.
pulls back and tests it, that will give you a good continuation trade, okay, to buy,
Yeah.
because this is gold. And it appears that the gold buy trend is still very much intact. You can see it's a strong buy trend. So
Okay. Yeah.
what you watch out for is when the market pulls back to a support or a previous resistance area, you look
Mm.
for an opportunity to trade. Okay,
Mm.
apply your candlesticks rule. Okay, apply your candlesticks formula. Apply your candlestick rule.
Mm.
Then you are sure that you can get a good trade. Okay, so the
Mm.
time frame doesn't matter. You can do it on any time frame. Okay, and that's entirely up to you what you want to do depending on your style of trading. But then you need to understand how these candlesticks they work. So for the PSC line, the PSC line is a candlestick, a bearish candlestick, followed by a bullish candlestick. But this time, this bullish candlestick closes above 60% of the previous bearish candlestick. That's the PSC line pattern. It's a bullish candlestick. pattern or formation. And then we have the tweezer bottom. The bearish version of it is the tweezer top. So this tweezer bottom, what it means is that this week and this week are coming from the same region,
Mm.
coming from the same region, the same area. Okay.
Mm.
So it doesn't matter whether both of them are bearish, bearish. It doesn't matter whether they are bullish, bullish, or bullish, bearish. In as much as those two weeks are coming from the same region, then it becomes a tweezer top or a tweezer bottom. And it's a
Mm.
very, so this tweezer top and tweezer bottom, they don't occur very often. But whenever they occur in the market, they
Mm.
move the market very well. And then, of course, the very popular bullish engulf. So ideally, a bullish engulfing candle is one candle that probably takes out like 3, 4 candles, previous candles. So, and you will see one thing about it. For the candles before the bullish candle, you will see there will be some kind of form of exhaustion in the candle. Maybe the candle came, big, and then when towards the point where it's going to do that U-turn, you see the candle will start experiencing shrinking. It will start shrinking in their size. Okay, and then the next thing you see a bullish engulf, just like you saw on this 1 hour chart just now. Okay, look at this 1 hour chart. If you look at this 1 hour chart here, look at it.
Mm.
See, this is big, big, very big candle, and then followed by, a little bit of exhaustion, and then boom, a bullish engulfing candle. Okay, so that bullish engulfing candle tells you that the market is changing direction, is going to buy. Okay, so
Okay.
this is in 1 hour. We see what happened here now. In 1 hour, this is a bullish engulf, while in 4 hour chart, it is what? It is a hammer candlestick. You know that form.
Mm.
So it's very important you catch that. So then the
So
same
that
thing.
analysis is different
Sorry.
from the analysis seems different because of the 1 hour and because of
Yes,
the
correct.
candlestick formation.
Yeah, the number of
Which
candlestick.
candlestick is best to use? Is it 1 hour or 4 hours?
So that's why I say it's entirely up to you, the trader. Okay. So some people prefer to trade 1 hour because of the kind of business that they are doing. And that's where the trader type comes in. In our introduction class, we talk about intraday trader, we talk about overnight trader, we talk about consumer trader. So all this, it depends on the kind of job you are doing. So for
Mm.
somebody that is doing a 8 to 5 job, that don't
Mm-hmm.
want to worry himself too much about looking at the chart,
Mm.
maybe the person want to trade either on the 4 hour chart or the daily chart. But for somebody that have all the time to sit on the computer, you can decide to trade from the 15 minutes chart, 30 minutes chart, and 1 hour chart. Okay, so it's entirely up to you, the trader, to choose the kind of trader you want to be. And that will determine the time frame that you will be trading from. But of course, one thing is certain: the higher the time frame, the stronger the signal, the lesser the noise. So, do you want to go to 1 hour or 30 minutes where you have a lot of fake out, or you want to stay on 4 hour or daily where you have one candlestick that can go for a very long time in profit? You understand? So it's up to you. So the same thing we have for bullish, we also have exactly the same thing for the bearish candlestick. Okay, so you have the bearish shooting star, which is a bullish candle, immediately followed by, okay, a bullish candle immediately followed by a bearish candle with small
Mm-hmm.
wick to the downside, and then a long wick to the upside. Okay, and then keep quiet. If you want to talk, I'll send you to sister's room. Or you sit down and go and use your phone. Okay, so why for the morning star and the evening star, you see
Mm.
is a bullish candle followed by an indecision candle
Mm.
and then a bearish candle.
Mm.
Okay, so it gives you a U shape. Okay,
Mm-hmm.
then The dark cloud is the opposite of the PSC line. See the PSC line for bullish. The
Mm,
opposite of it is dark cloud in bearish.
mm,
Okay. So
mm.
it's a bullish candle followed by a bearish candle that closes below 30% of the previous bullish candle, 60% of the previous bullish candle. Okay. And then you say sell, place your stop loss, 15
How are you going
pips.
to know it's 30% or 60% or you
You
just
use
determine by
you can use your eye gauge now. But when you see, you can divide this candle into two and you say this is 50%, right?
okay.
So
Mm,
you can use your eye to estimate it and
mm,
say, okay, this is above 60% or above 50%.
mm,
Okay. So that's it for candlestick. So you basically need to uh uh go to the chart and then try to look for all the candlestick formation, that and see where they are happening from, see where they are coming from. Okay. If you know
mm,
where they are coming from, if you see the one that is coming from a support zone, a resistance zone, or a supply zone, a demand zone, you'll be able to use them, to predict the market
mm,
accurately. Okay.
mm,
So it's
mm,
very important you do that. I mean, like a test or a check,
mm,
and that in the process you can even come up with your own formula and say, okay, this is what I want to see before I place a trade,
mm,
and you can stick to it and say, this is my trading formula. As traders are many in the world, so also strategies are many.
mm,
There are a lot of strategies that you can trade with. All right, so today, what we are doing today is interesting. Okay. So
mm,
today we are going to jump into trend lines. Okay.
mm.
Let me take this one out first.
Maybe that's for me for myself.
Take this one out.
What happened?
Trend line.
Football.
So we're going to cover these two slides today. We're going to cover this one, and then we're going to cover this one, and this one. So we'll start with trend lines. Okay, so for trend lines,
Mm,
there are two types of trend line you can find in the market. Either you have a up trend line or a down trend line.
yeah.
Okay. Now, how do you draw this trend line? So typically what you see people do, people will just draw lines on the chart. Okay.
Mm,
And they
mm,
say it's trend line. And sometimes because they didn't draw it accurately, it will be a problem for their trading.
mm,
Okay. So trend line can be drawn wrongly. And when you draw it wrongly, it could be a problem. Now, there are people that says that the more the touches, the better the trend line. Well, that's their opinion, okay? But
mm,
with MTI, you will understand that there's a standard way to actually draw trend line to have results, okay?
mm,
And that way is identifying the price swing. This is the price swing. You already see this one before. A,
mm,
B, C, D. So I say in the forex market, irrespective of the time frame of the chart, you have one thing that is continuously repeating. Continuously repeating, okay? And that
mm,
thing is the price swing. I say the price swing, this price swing A, B, C, D, can be likened to a game. So we say one full price swing is one complete cycle. So when the market completes a cycle, the market will go around and do another cycle. And that's why I said when your market forms A, B, C, D, in order for the market to form another A, B, C, D, your
mhm,
C becomes your A, your D becomes your B, and then you wait for the market to pull back to C, and then go to another D. In that way, you have a continuous circle that never stops. All right. So these are the A, B, C, D. So this is A, B, C, D. A, B, C, D. A, B, C, D, right? So it's a continuous thing. Now, what the trend line does is, if you are drawing a down trend line, what you are doing is you are connecting the higher lows. That is, you connect your A to C. A to C. That's what you are doing. Is that clear?
Yeah.
You draw a line from your point A to your point C. That line can be extended. Okay? That's your trend line. Okay, so now we've not gotten here, but then we'll come back. So this is your Fibonacci. This is the way the Fibonacci works. So when you put your Fibonacci between point A and point B, you wait for the market to come to C. Now, with the Fibonacci principle, your C is going to come from any of these levels. It's going to come from either 38.2 level, or 50% level, or 61.8% level, or 78.6% level, or 86% level. These are the 5 levels, 5 typical levels that you can get your retracement. Now, this retracement, when the market comes here, what happens is, when the market moves and gets to 38.6, now when you are looking at the chart, you are not going to see 38.6 in the chart. Okay? If I go to the chart now, okay, as you are looking at this chart, there's no 38.6. There's no 61.8, right? But imaginary, it exists, okay? But it's not visible to your naked eyes. So what you do, the Fibonacci will not help you, okay? So if you spread the Fibonacci on the chart, you'll be able to see these lines, okay? And then you now see the reaction of the market from these lines. So when you see the reaction of the market from these lines, you'll be able to tell, whether the Fibonacci is working or not. Okay, and we're going to do example of it. Okay, but just to explain our trend line, the idea is that when the market creates your A and creates a B, the market will eventually come and create a C in any of these levels. Okay, so when the market comes and creates a C, for you to draw your trend line, you are going to pick the lowest point of your A and connect it to the lowest point of your C. Okay, that's your trend line. So each of these, now this A, B, C, this is 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 C. So what you do, you connect A to C. When you connect A to C, when you want to draw the next trend line, you pick from the last C and extend to the next C. Pick from that C, extend to the next C. Okay, so there are typically 3 trend lines that exist in the market. We have the long-term outer trend line, we have the outer trend line, and the inner trend line. Now, what happens in the market is that when the market breaks an inner trend line, the market will naturally gravitate to the outer trend line. When the market breaks the outer trend line, the market will naturally gravitate to the inner trend line. And now, which one is the long-term trend line? Which one is the outer? Which one is the inner? The long-term is the first trend line that you draw, that is connecting the first A and the first C. Okay? That's what gives you your outer trend line. So now what happens is this. You agree with me that this A to C, this line is a slope, right? And if this market continue to go on this slope, this market will go and go and go and go and go for a very long time. It will still get to this height, right? If it continues on this slope, it will still get to this height, but it will take a longer time. So now what happens is this. In the market may want to get to where it's going on time. At least it wants to be faster. So in an attempt for the market to be faster, the market will start with a long-term outer trend line, and then the market will create a outer trend line. This outer trend line, it will take the outer trend line a shorter time to get to its destination as compared to the long-term trend line. And then to take the inner trend line even faster time to get to its destination as compared to the outer trend line.
Mm.
Do you understand? So
Yeah.
all of them are going to go to the same point at the end of the day, but the person that is on this lane will get the first, followed by this lane, and followed by this lane. So how do you do it in the chart? So there's a process, okay? So I'll just read it. So to draw uptrend lines across the lows of support, connecting A's and C's after a new high has been formed. Now, remember, the condition for you to draw A to C is that D must be formed first. Do you get that?
Mm-hmm.
You know the market will create, so let's go back. The market will create A, B, C, right? Now, when the market creates A, B, C, we are not sure if this market will go up and then come back and come below this C again. So we are not sure. So what we want to, what gives us assurance that the market will not come back is when the market goes and break above B and then creates two candles to the left and two candles to the right. At that time, the market has formed a higher high. So whenever the market forms a higher high, we can now come and draw A to C. So when we draw A to C, how do we trade with it? Once we have drawn A to C, we will now wait for the market to come back from the D and approach the trend line. When the market approaches the trend line, we start looking for candlestick formation in that trend line area. So you draw A, B, here you stop. Why did you draw AB? You draw AB because this one has given you two candles to the left and two candles to the right. That's when you draw A to B, A to C, and you stop. Now, when you stop here, you are now waiting for this market to come back to this trend line region. When the market comes back to this trend line region, you can put a counter trend line across this market, or you wait for a bullish candlestick formation to come up, to show up in that trend line region. When you see that, you have a trading opportunity in your hand. Okay. All right. So, how do we draw the trend line? This is the biggest, okay? And this is where the population is getting it wrong. Okay, how do we draw the trend line? So, if I read what you have here, he said the long-term trend line is drawn afterwards, compressing the chart. Compressing the chart.
So what time frame is best to draw the trend
It
line?
doesn't any time frame. You can draw the trend line on all time frames.
I know the
Yes, on all time frames. It doesn't matter. Okay. So I can change this to daily. I can change this to weekly. I can change this to monthly. It doesn't matter. You can draw your trend line on any time frame. 30 minutes, right? 15 minutes. You can draw your trend line anywhere. It doesn't matter. But now, what's the condition of drawing the trend line? The condition is first, you need to compress your chart to the smallest. Okay. So maybe your chart is like this, and you want to draw trend line. Your trend line will not be accurate because you are not seeing a holistic picture of the chart. For you to see a holistic picture of the chart, you need to compress this to the barest minimum. Okay. Now, I told you something the other day. I said, if you are standing in front of the chart, what can you see? What are the highs you can see? And what are the lows you can see? So the ones you cannot see, you don't need them. So I'm standing in front of the chart and I'm looking to my left. You agree with me that I will see that this is the highest point from the up,
Yeah.
right?
Yeah.
And you agree with me that I can see that this is the lowest point from the downside, right? So from the downside, I can see here as the lowest point, and from the upside, I can see here as the highest point. And now for me to draw the trend line, what would I do? Allow stop that. Stop that. Off it. Go and sleep.
On my phone. Tell my phone.
That's it. Okay, sorry about that.
Yeah.
All right, so now from the front of the chart, right? You look to your left. Where is the lowest low that you can see? You put a line there. Where is the highest high that you can see? You put a line there. Okay.
Mm.
So I said the long-term trend line is drawn after compressing the chart and connecting the first A or lowest low with the next higher low. You see that? That's for the long term. So if we go to our chart now, for us to draw the long term, so we can draw long term from bottom, we can draw long term from up, but let's treat the up first. So we say to draw the long term from up, we pick your trend line, pick this highest point, stretch it, make it straight like this, and then start moving it to the chart. The first week it touches, stop. First week, stop,
Okay.
right?
Mm.
This is your first week that it touches, you stop. So this line is your long-term trend line from the up, from the top.
Mm.
Now
Mm.
you can do the same from the bottom and say from here you pick this lowest point, you
Mm-hmm.
stretch it out, move it, keep moving it until you touch the first week right here, you
Mm-hmm.
stop. This is your long-term trend line from the bottom. Remember, there was a time where this long-term trend line
Mm.
was here. Look at it, where it was here.
Yeah.
There was a
Yeah.
time it was here.
Yeah.
Okay.
Mm-hmm.
And then the market breaks this long-term trend line in an attempt like the market wants to go down, but the
Mm.
market didn't go down. Instead, the market created a low, created a higher low.
Mm.
When the market creates a higher low, you
Mm.
can adjust your trend line to that low. Okay. And then you
Mm.
start waiting for it again. Exactly.
Yeah.
Okay. So now, these two lines that we have drawn, so if we take out this guy and take out this guy, these two lines are our long-term trend line, both from up and from down. Okay. Then the
Mm.
next thing you want to do is to draw your outer trend line. So for you to draw your outer trend line, where was the last place that the trend line touched? Here. You pick here, stretch it out, Move it until you touch the first wick. Stop there.
Again.
Right? This is your outer trend line. Okay? You come here, you do the same thing, pick this, stretch it out, move it to the chart, it touches here, right here, you stop. This is your outer trend line. And then the next thing you want to draw is your inner trend line. So you do the same thing, pick here, stretch it out, come down all the way, all the way, all the way, and you stop here. This is your inner trend line. Okay? And then if you come here, pick here, you do the same. Now remember, at some point, this was here. At some point, it was here.
Yeah.
Okay? So now, at the moment, this is where it is. Right here. Okay? So this is your inner trend line. Okay? So you have your inner trend line to the top. You have your inner trend line from the top. You have your inner trend line from the bottom. Now, you now as a trader, now what you are doing is you are now watching this trend line. Now, it's either the market will come and break this trend line, retest it and sell, or the market will gradually go like this and break this inner trend line, okay, and buy. Now, when the market breaks inner trend line, what did I say will happen? It will move to the outer trend line. When it breaks the outer trend line, it will move to the long-term trend line. And when it breaks the long-term trend line, that is a clear indication of market reversal. Okay.
That means it's going upward, yeah?
Yes, meaning that it's going upward. So it all but it's vice versa, right? It can happen to the downside, it can happen to the upside. Okay. But this is how you draw trend lines on your chart.
Is this not going to be confusing? It's like
No,
drawing
it's not.
so
it's not going to confuse you. So let me take out
with the way
everything
the
I've
thing
drawn.
is
So
now
this is
looking
I've taken out everything I've drawn now, right?
Mm.
You know, when you are doing your analysis, you are analyzing for two possibilities, whether the market is going to sell or the market is going to buy. That's what you're analyzing for. But now, look at this. Look at this carefully. Look at this place. This place is a support, right?
Yeah.
This place is a support, right? This is a support. This is a support. And then, in fact, this is also a support, right? Now, the market has come to a support. I'm just showing you why this market got from this place. Okay, and that's what's going to happen here now. This market came all the way to a support here. Okay, when the market hits the support, you draw a trend line from when the market hits the support. Now come to this up here, pick your trend line and draw and see where will be right here. Right here, right? Look at it. Can you see that? This market, you have drawn this time now, all these candlesticks, they've not happened. Oh. When you drew this candlestick, they've not happened. You drew this line, and then you wait for the market. The market came and hit the trend line. It couldn't break through. It pulled back down, came back to test a previous resistance point, and then went back up and break the trend line. When the market breaks this trend line, that's where you want to enter a buy.
Is this a live trade? I can see one buy on
yeah, this is a live trade, yes.
Oh, okay.
Okay. That's when you want to enter a buy. Okay. So conservative trader will not enter buy here. They will wait for this test. I seen the test. The market break the trend line. The market came back to test the trend line here. When the market
Mm.
comes back to test the trend line, that's where conservative traders will enter the buy.
Bye. Okay.
So why the aggressive trader will make 1,700 pips, the conservative trader will make 1,800 pips.
Mm.
You see the difference?
Mm.
They are going to the same place,
Yeah.
right?
Mm.
So if you are, you can develop a strategy around trend line, I say
Mm.
the only thing I want to trade is trend line. Okay, you do
Mm-hmm.
this. You come here. This is a resistance zone. You put a line
Mm.
across it. Anytime
Mm.
the market comes back to that zone,
Mm.
pause, stretch it out. Okay, the market has come back to that zone.
Mm.
Yeah. So
Mm.
let's draw a trend line. You wait for the market to hit this level, right? Once the
Yeah.
market hits this level, then you go to the highest point before the market come down, and you draw a trend line from there. You pick this, you draw, it hits this one, right? Then you pick this one, you draw, it comes down and comes down and comes down and hit this one right here, and then you stop. You see that?
Mm.
Now the market breaks it, breaks the trend line,
Mm-hmm.
perfect break. Look at it, right?
Mm.
And then aggressively you enter and buy, and you put your stop loss below this point. It's still fine. Even though the market pulls back to try to test the trend line, you
Mm.
see where the market went back. Aggressive trader will just enter at the buy can break candle to buy, while conservative trader will wait for this pullback before they buy.
Okay.
See
I
that?
think waiting for the pullback is always better because it's that pullback that took me out of my biggest time trade. That
Okay.
tiny pullback, yeah.
Yes. So it's better to wait for the pullback.
Mm.
Okay. The only thing is that sometimes you may be waiting for the pullback and the market will not pull back, it will just go.
That's another issue
So
again. So it's
that's
very
where
tricky.
that's the challenge that some people have that make them to enter the trade, and then they'll be waiting forever. Okay,
Mm.
like this one that I've entered now. Ideally, I want to wait for the pullback. Okay, but
Has it
now
not pulled back?
no,
No.
I want to wait for the break of the trend line. It
Okay.
hasn't broken the trend line itself. And
It's 1 hour.
another disadvantage of this entry is that the market may be targeting this high to want to come to this high
Mm.
first before buying. If
Yeah,
the market decided to come to this high, then I will lose this trade.
because it's going to cross your stop
Yes,
loss.
it's going to cross my stop loss.
Mm.
But even though, let's say the market comes and I lost this trade, no
Mm.
problem. When the market hits this place, I will
You
have to
take you take
go
trades.
back, put my trend line, wait for
Mm.
the trend line break, and then buy it again.
Mm.
Okay?
So
So,
let's use this trade now and analyze. Hmm?
okay.
So for instance, for this one now that is running, if you want to draw the trend line, using the support, the last is it last support or the highest? Is it the lowest support or the highest support that you use now? That's
No,
the first support before the
look at
second
it.
and
Look at, if
third,
I
right?
want to draw the trend line for this trade, it's simple.
Mm-hmm.
See here, this is, let me zoom it out a little bit for you. Okay, so this is a support. Can you see this place?
Mm-hmm.
This place is a support, right? Agreed?
Mm-hmm. Mm-hmm.
All the way to this candle here, this top here. I said the whole of this place is a support zone. It's a
Mm-hmm.
demand zone.
So you
And then
have to draw two
the
lines or
market has
one line.
come back. Yeah, the market has come back into the
You
demand zone.
tested it and broke it.
Okay. Now, for me, what I've done is that I've entered aggressively, right? But for
Mm-hmm.
a conservative trader will first of all come pick this, draw this trend line, okay, right here, and then pick this, draw this trend line to this point,
Mm.
right here.
Okay.
and stop. So a conservative trader will draw this line and stay here and wait. Wait for the day the market will break this trend line.
Okay. Before they will
Because
take a
because
trade
this market can actually come to this trend line and
and
then
come back
stand again.
again. Yeah,
Yes.
that's true. That's true. Mm.
Okay.
Mm.
You want me to come and flog you again, Abi? Take it to your sister's room. Don't come here. Yeah, go. Okay. So a conservative trader will wait. Like in this instance, I didn't wait, so I'm just waiting. If I notice that it's going to come against me, I will just close my trade, okay, and
Mm.
leave, and then count my loss and wait for another day, okay. But
Mm.
ideally, this is 1 hour chart, right? If you switch this chart to say daily,
One.
you may have
Mm-hmm.
a different analysis. Look at daily. Daily self. Look at daily.
Mm-hmm.
Let me zoom this out. Can you see? Look at the support. Look at the resistance. The last one here.
Mm-hmm.
So if this market is going to come to this place before it wants to run, then this my analysis is not correct.
It might not get to that point.
You understand?
Mm.
This my
It
analysis
might
is
get
not correct.
to it might get to between 3193.55.
But if you look at this one, look at this one now. See this one. The market came here and took off,
Mm-hmm. And to
right?
close, yeah.
Let's see this one. The market did not 100% get here. Okay.
Mm. Mm.
Let's see others. Even this one, you can see that from here, it actually came back. I mean, if you take this place, but
Mm-hmm.
that one is not major. So I
Yeah,
think
it's not
that's,
very.
yeah. So
Mm.
let's see, let me compress it a little bit more. Okay. So if you see this one, if you look at this one, see here,
Mm.
break, test, go.
That's a double confirmation.
Perfect.
Mm.
See this one,
And these are in daily charts.
break, test, go. Right?
Mm. Mm-hmm.
So that's the way it works. Okay. So that's more like looking for a previous resistance that has turned to a support, or a
Mm.
previous support that has turned
That's
to a
that
resistance
position.
in order for you to trade. But the
Mm.
best way to trade it is what I just explained to you. Because you won't see the wave too much on daily chart. It's better to go
Mm.
to either 4 hour or one
Or
hour
1 hour.
30 minutes. You
Mm.
understand?
Mm.
So now you can come here, you can come to daily here
Mm.
and then pick the resistance. Like for instance, we pick this resistance on daily here.
Mm-hmm.
Okay,
Mm.
pick this resistance. When you switch to 4 hour, you will see it. When you switch to 1 hour, you will see it.
Mm.
When you switch to 30 minutes, you will still see it.
Mm.
Okay, so
Mm.
that's why I say this my entry is a little bit too early. Okay, because it
Mm.
looks like the most ideal place that this market is coming back to is here.
Mm.
Okay. So I'm sure that this my trader will close with these lines and observe the market behavior between now and tomorrow.
Mm.
Or if the market does anything like this, the market does this. If the market move a little bit like this and touches this trend line, I
Mm.
close my trade. Okay. Because
Mm.
the market can fall from here and come
Can
along here.
come down. Yeah. Mm. And this is gold, you know. Gold
Yes.
is very. It's gold that killed me. My first ever trade, I made 4-5. It was gold that took me out.
Mm.
Using high lot size. Yeah, in 3 days after I learned in Forex. But now I don't have confidence again because I've lost too much.
And because your problem is that you are trading with too much high lots.
Too
You see
much
this lot,
risk. My
see
risk
this,
is too
see
high.
this 0.01. See the
Yeah.
take profit. If I move the take profit here,
Mm.
look at the take profit. Even though it's 0.01, that is 309,000 profit. 0.01.
Not bad.
Mm?
Which
You
is not bad.
understand? This stop loss is about 91,000 stop loss.
Mm.
See that?
Mm.
So gold is small, but the
Yeah.
dollar per pip is high.
It's
So it
high.
makes a lot of money.
Yeah.
Okay.
Mm.
All right. So that's explain how you draw trend line, and
Mm.
it's the same for uptrend
And
and
downtrend.
downtrend. So look
Mm.
at the market. The market was in a downtrend. Okay. The
Mm.
market was in a downtrend. Now, how do you even think of coming to draw trend line first? Because the market was in a downtrend. Number
Mm.
one, you need to wait for the market to break the trend line. And when the market breaks the trend line, the market will create a higher low. From that higher low, you are now going to draw the uptrend line. So once the market creates lower high, you draw down trend line. Once the market creates higher low, you
Hello.
draw up trend line.
Mm.
Okay.
Mm.
So first compress your chart and find a trend reversal where the market has broken a downtrend line. And this is now making higher highs and higher lows.
Hellos.
Okay. So
Mm.
this analysis that we did now on gold,
Mm.
okay, let's come again and do it again. Let's use 4 hour. Okay, let's use 4 hour. So if you look at 4 hour, uh the market has not really broken. So let's see. You take, so let's even take here. Let's start from here. Let's just start from here.
Mhm.
4 hour. Okay.
So it's not advisable to draw a support line first before drawing trend line. No, right? No?
No, it's fine. If you want to draw support line, it's fine. All of them are
Mm.
fine. So this trend line that we are drawing, so for your information, I can simply just come here. I have an indicator that I can say, okay, just give me the trend line by default. I don't need to,
Really?
I don't want to stress my head. I just put the indicator, one push, one button, and every trend line.
Oh.
And this one cannot miss. This one is not missing because it's picking the actual trend line. So in this trend line that I've drawn, let me explain this to you. All this golden rod color, this one, this one, this one, they are
Mm.
long-term trend line.
Mm.
Do you understand?
Mm.
And then you see this one, this white one
Mm.
is outer and inner
Trend
trend
line.
line.
Trend line.
Okay.
Okay.
So I can do something and I say, I only want to see the long-term trend line. So I turn off the inner trend line, turn off the trade touch. Okay. I just turn them up and I say, okay. Now I'm no longer going to see any inner trend line. I'm just seeing only the long term. So
Mm.
what am I going to do? This long term tells me the market is facing the up direction, right?
Mm.
So I will
Mm-hmm.
now wait for this market to come to this
Touch
line.
this.
When it
Yeah.
touches this line, when it
Yeah.
touches this line, I expect the market to create a support. It's just like, for
Mm.
instance, now this one touches here and then
Mm-hmm.
buys from here up.
Mm.
Okay, so I expect it to come
You
down,
draw the
touch
support of where this last trend line is touching.
this one.
I think it aligns with the previous supports. with the
Yes, it's
previous.
aligned with the previous resistance. Look at it here. This place. Perfect.
Yeah. Eh,
You understand? So if
Mm.
you draw this one now, if we draw this one here now, and then this market comes down and hits this one, okay?
Mm.
Now,
Mm.
one thing you also know is this. Look at this. You see how this one comes here, and then the long-term trend line came from the same place. That is
Mm.
another signal. We call it confluence, okay?
Oh.
Uh, Horizontal support is telling you that place is a support. Dynamic support is telling you that place is a support. So it gives you higher confidence that, hey, this market is going to buy from here.
Mm.
You understand? This market as it is, it can still fumble here, fumble here, fumble here, and come and touch the line where these two are intersecting. You see where these two are intersecting? This market can still play pranks here,
Mm.
and eventually come
Mm.
here.
And come here. Mm. I think you entered the market too early.
It can go up a little bit and then
Mm.
come back to this
Calm
place again.
down. Yeah. Mm.
Okay. So it all
Mm.
depends. It all depends on what you want to do.
Mm.
Okay.
Mm. So how do you get, although I have not gotten to that point, where you help me set up my laptop, my trades, my even the signal ones I will still talk about it, but I don't
No
want to
problem.
just let me learn, let me concentrate and learn first.
Just learn it first. Get grab
I'm
the idea
trying to
first.
be very patient and because
Yeah.
I really want to get it right this time around.
Sure, you will. You will definitely get it right. Once you know all these things I'm telling you, trust me, you get it right. Once you can apply them, once you can replicate them, you'll definitely get it right. Okay.
Mm.
So basically, what we are doing here is the same thing for downtrend and uptrend. Okay. But
Yeah.
now, one thing you also need to know is how to this one start. So the market is market has been in a downtrend. And
Yeah.
then eventually the downtrend line got broken. After the
Mm.
break of the downtrend line,
Made a higher low.
you you need a higher high and a
Mm.
higher low.
Higher low. Mm.
Okay. So you need a higher, this higher high has to be higher than the last resistance here before
Mm.
this low.
Mm.
So the
Mm.
market come, number one, the market can break this trend line
Mm.
and it's unable to get to this point, or it gets to this point and then it comes back again and see go down again below the trend line.
Mm.
Possible, right? So the
Mm.
only thing that will happen that will give you more confidence that now the market has broken the trend line to not go down again is when the market takes out this last resistance
Mm. And form a new resistance.
and form a new resistance. After the market has formed a new resistance, a new trend is
Mm.
now getting set.
Mm.
So after the market form a new resistance, watch this place. Towards this area, the market will come and form a support.
Yeah. Very close. Mm.
Yes. And from there, the market will start rallying.
Mm.
Okay.
Mm. Mm. Mm.
So this is just an example. Okay. The
Mm.
market came, break the trend line, form a higher high, and then created a higher low. And then you see the downtrend line
Mm.
broken, and then you see the uptrend line that has formed. So now with this uptrend line, you cannot be waiting for the market to come close to the trend line and see how the trend line will react to the market. Okay.
Mm.
So in an uptrend, trend lines are future locations where the market may bounce back up. They are future potential level of support. Okay.
Mm.
So this is what I was trying to describe to you. You drag, pull it out, stretch it out, then move it into the chart. When it touches the first week, you stop. Okay,
Yeah.
see that?
Mm.
So downtrend, the same thing, the same story. First of all, establish the market is making A, B, C, D price swing.
Mm.
Okay, and once you
Yeah.
have that, the market form higher high, and lower high, lower low, lower high, lower low. So you are going to connect all the lower highs to form your downtrend line. So in your uptrend line, you connect the higher lows. In your downtrend line, you connect the lower highs.
Mm.
Okay,
Yeah.
just like we described initially. Okay, look at this one.
That cross.
Okay,
Mm.
see that? See that? See that? And then when the market breaks the inner trend line, just know that its next target is for it to run to the outer trend line. So the same thing in the downtrend, trend lines are future locations where the market may bounce back. Okay, they
Mm.
are future potential level of resistance. Okay. All right. So I think that will be all for trend line.
2014. Oh, it's been a long time.
Is it?
I'm saying 2014, 2015.
Yes. All right. So now we're going to enter into a very beautiful discussion, and that is Fibonacci, retracement, and extension, and how the ABCDs are formed. Okay. Fibonacci. So this is a concept that a lot of people, they love it, they like it, they hear it, it's interesting, but it could
But
be
you don't
very
know how to draw it.
stubborn.
Yeah.
And funny thing is that it's one of the most accurate tools in the forex market.
Wow.
Most accurate. When I say accurate, I mean most accurate.
Great.
Okay.
Yeah.
So when the market is forming, the market does A, B, C, D in all the time frames, creating price swing at every interval. Okay,
Mm.
so if an uptrend, the market starts from A low, move to B high, retraces to C low, and then it extends to D. In the same way, in the downtrend, it starts with A high, move to B low, extend, move back to C high, and then extend to D. And then you
Mm.
see a full price cycle up and a full price cycle down as formed. Okay, now the Fibonacci phenomenon. Leonardo da Pisa de Fibonacci, that's his full name, discovered the Fibonacci
Leonardo
numerical
da Pisa
sequence.
de Fibonacci. Oh,
Yeah,
that's his real name.
that's his real name.
Fibonacci is his real name.
Yes.
Wow.
The 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 numbers are named after him. Okay.
Ah. Mm.
So he said he was the one that discovered the Fibonacci numerical sequence. He worked for the royal family approximately 1170 AD, and in the year 1202, he published a book called the Libra Abaci. That book is called the Book of Calculations.
Mm.
And it's the same one that introduced the Arabic numbers to the Roman, replacing the Roman
Roman
numeral. So
numeral.
he has done a lot of work. Okay.
Yeah. Mm.
And here is the
Was
Roman
he a
numerals
genius?
table.
Mm.
Okay.
Mm.
So one of the idea about this Roman numeral, whatever, is that, today you can call somebody a billionaire. It's
Mm-hmm.
easy. It's easy to say this person is a billionaire. But
Mm.
when you write that billion in Roman numeral, you cannot pronounce it.
How do you even want to write it, Seth? How do
So,
you write millions?
so you can imagine.
19.
All
Wow.
right. Okay, so this is the sequence. This is the sequence that does the magic. And
Yeah.
when I'm taking this part, I really like people to just be focused and just try to flow. Because
Okay.
sometimes it could get to a point and it may look confusing. Okay.
Mm, mm.
My loving, come and listen to this section. This, this session used to dazzle a lot of people. Okay. So
Mm.
there was one lady I was teaching, and when I was teaching the class, she was so interested and say, wow, this is beautiful. This is when I got to Fibonacci like this. As soon as we finish the class, the
You
woman
confused.
you see everything which she learned before. All of
It
the
don't go.
all the don't
Oh my God. Hmm.
So,
It's very
so,
tricky.
so
Mm.
now look at these numbers. It starts from 0. The next number is 1. The next number is 1. The
Why is
next
one
number is 2.
times?
Okay, so I'm going to explain to you why you have 1 twice. The reason why you have 1 twice
Mm.
is that when you add the first number and the second number, you
Mm.
must get the third number.
Oh, okay, 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 gotcha.
So in order for you to have 1,
Mm.
0 plus 1 will be
Is
1,
would be
right?
one now. Yeah.
The mathematics is simple, Abi. Very
Mm.
simple. 1 plus 1 is 2. 1 plus 2 is 3. 2 plus 3 is 5. 3 plus 5
But
is 8. Simple. Very simple. So why are people shouting that Fibonacci is difficult?
8 plus 13 is 21. So
Yes.
13 plus 21 is 34. So 30
Yes.
plus 21 is 55. Then
And that you
50.
can go to infinity non-stop.
Really? Wow.
Yes.
Okay.
Yeah, the
Sure.
first number plus the second number will give you the third number. So that's how the sequence come into play.
Okay, that's why
Okay.
one is twice.
Yeah, that's why you see that 1 is twice. Excellent.
Twice, okay.
Now,
Makes more sense.
I want you to look at these naturally occurring flowers.
I wait till you bring flower. Go. God have mercy.
This is flower.
You're about to confuse me. What's flower
Okay,
doing in
so
trading?
all right, all right. So now look at these flowers. These flowers that you are seeing,
Oh,
they
yeah.
are
Yeah,
they are flowers, as in
I
it's not
see.
drawing, they are pictures.
Yes.
Picture that somebody snapped. They are actually snapped. You can
Mm,
actually go outside your environment, see this flower and snap them. Okay.
mm,
Now,
mm, mm,
but the beautiful thing about this flower is that, remember, you were asking me just now, why do I have 1 twice? I
mm.
said, you have 1 twice because the summation of the first and the second number must equal the
The
third
third
number,
number. Yeah.
right?
Mm.
Okay. So now, I want you to mark this number. Look at this number. 1, 2, 3. They are underlined. For all
Yeah.
these plants that are here,
Mm.
the number that each of them fall into is this area that is underlined here.
Okay.
Okay, so the first one
Is
is called
one.
white color lily, and it grows with 1 petal. 1.
Mm. Yeah.
Okay.
Yeah.
The euphorbia grows with 2 petals.
Mm.
The trillium grows with 3 petals. Now, what we are trying to do, we are trying to relate nature to the Fibonacci
Yeah.
numbers.
Oh.
This is one of the reasons why it is effective in the forex market. Okay,
Mm.
they are trying to tell you that if this number can be so effective in nature, think
Mm.
about using it to trade.
Mm.
Okay, so and
Mm.
this goes on and on for several plans. So for this one that are selected here, just to tell you the ones that have this number of petals, the maximum here is this one, the feed daisies, 34
34.
petals. Okay,
Yeah.
but now once we go to the next page, this is the pineapple that you know, right? Now this pineapple, when pineapple is growing, You may not be able to take your time to go and see how it
Count it.
spirals is coming out. But when the
Yeah.
pineapple starts spiraling out, it starts with 8 parallel rows.
Oh.
Now, the pineapple could have jumped to 15 parallel row, but it didn't do that. 15 is not in the Fibonacci number. The next parallel row is 13. And 13 is in the Fibonacci number. You see that?
By nature.
Yes, by nature. Because this one now, you are not the one controlling it. You plant
Oh.
pineapple, it started growing.
Yeah. Yeah.
And
Yeah.
this is the order. I mean, this is a research that has been done, right?
Mm.
This is the order with which it grows, right? Now, from 13, there are several other numbers before 21. But it did not come with those numbers. Instead,
Mm.
it goes to 21. So that tells you the efficacy of the Fibonacci numbers.
And 8
Okay.
plus is 21.
There's this other plant that looks like pineapple too. It's spiral in the same order like pineapple. Okay. And then look at this fruit. It's called the passion fruit. Now, this fruit is beautiful in the sense that it starts from beginning. When this fruit starts growing, when it's going to blow, it blows, boom, it goes to 3. Okay. And then when it's splitting again, it splits to 5. When it's splitting again, it splits to 8. And the next split is 55. Now,
Wow.
even if you take like I said, the number goes all the way to infinity, right? When you
Yeah.
take the numbers, you see that even the 55 is still in the Fibonacci sequence.
Mm.
You understand?
Mm.
Okay, I see that's not enough. Look at this one. The same thing. Look at this one. And this one is even easy. This one is popular. You can quickly see this one if you go outside. Now look at this plant that started with one stem, one. When
Mm.
you want to split for the first time, it did not split to 4.
Give birth
It
to
did not
2.
split to 20. It split to 2. Look at the stem.
Mm.
Then the next split is 3.
Mm.
The next one is 5. The next one is 8. And then you see the flower is 13. Why is this so effective? Why is it that this 13 is not 12?
Mm.
Okay. So when
Mm.
they saw, so see, there are a lot of examples in Fibonacci. If you want to see real life examples of Fibonacci, go to Rome. If you go to Rome, you will see more. Even the
Rome.
buildings. Yes, Rome, the Vatican
I've not
City.
been there though. Mm.
Even the buildings, even the images,
Mm.
that you see that they built in Rome,
Mm.
they follow the Fibonacci sequence.
Seriously.
Yes.
Ah.
Most of the architectural work you see, they follow the Fibonacci. Even the river that flows follows the
Eh.
Fibonacci sequence.
So you're pushing me to go to Rome. I'm going to go there and go and do my experiment.
Go and do your
That's
research
my next
and come back.
destination,
You'll
Rome.
be, you'll be
Okay.
amazed. Okay.
I'm going to
So
go
all this
there.
is just to buttress the point that, hey, these numbers, they are very powerful. Now, this
Mm.
is just a count of the sequence. Okay. Now watch this. Do you know the order in which rabbits reproduce?
No.
This is the order that rabbit reproduce. You know when Professor Talasino came to Nigeria to teach us, that FSCN guy from Athens, that was the first time I heard this thing. He talked about rabbit reproduction. Okay. When he taught it that, I didn't understand it. The man explain. Just like I will explain Fibonacci to people today, they will be dazed. That was how I was dazed to the first time. The man
Mm.
explain. When he got to this rabbit home, I didn't understand what the guy was saying again. So he said we should go home, we should go and do a research for rabbit reproduction. And of a truth, this is our rabbit. So he was telling us that if we put rabbits a male and a female rabbit together and mate them, and they start reproducing that by so generation, this is the number of rabbits that they would have reproduced. And he told us, okay, now what about this? This one is human being. Maybe as you are looking at it like this, it doesn't make sense. So let me explain it to you. You say every human has two hands, right? Two is in the Fibonacci sequence. The human being is one person, one is in the Fibonacci sequence, right?
Mm.
Each hand, each of these hands, each one of these hands has 5 fingers. Now, like, each finger has 3 parts. Abi,
Yeah.
right? And
Mm.
each of these 3 parts are separated by 2 knuckles. Which one you want to argue?
Hey, God have mercy.
Even your piano follows the Fibonacci sequence. Look at it. This is the octave, right? In your piano, for those that are learning how to do music. Look at it. Each octave has 13 total keys. 8 are white, 5 are black, 3 black keys, 2 black keys, and it works. Now there's another one I would have shown to you. In fact, I think I should go and look. I think I should go and look for it and show it to you, so that you. I told you that both natural occurrences they follow the Fibonacci sequence. Just hold on. Let me just go back. I think I sent that book to you already. Let me just go back one step. It's good. Is it? That's good. Essentials of the Jerry Martinez. Okay, so let me just open this book. I sent this book to you already, so you have it.
Oh.
I say Control F and type Fibonacci. Okay, page 129. Okay, page 129. Okay, so look at this. Hmm? I just want to show. Let's look at this one. Look at this. Look at this one. This one. I want you to see this one. See this one. This is the Newman body that they measure that falls in line with the Fibonacci ratio. But the one I really want you to see is the one of mountains and rivers. Look at them. These are not drawings. These are pictures, real life picture of places, that follows the Fibonacci. Look at this. Which mountain is this? Rocky Mountains. Look at Kobe's.com. You can see the people that took the picture. You see? They measure and they follow Fibonacci sequence. So if all these things can follow the Fibonacci sequence, why do you think other things other things like the forex market will not follow the Fibonacci sequence? So now this is just a demonstration of the efficacy of the sequence, right? And then let's come to
Mm.
the ratios. So remember the sequence is just a string of numbers. It's
Mm.
different from the ratios. Okay. So
Mm.
somebody sat down and said, if these numbers are so powerful, they are so powerful like this. Okay, let's try to do their ratio. So the first one was that it's okay. Let's add the preceding numbers. So maybe you want to add 34 plus 55. Sorry, you want to take a ratio between 34 and 55, 55 and 89, 89 and 144. So take 89 and use it to divide 144. Your answer will be 0.618. Take 144, use it to divide 233. You'll get 0.618. You can try it. Take 233, divide 377. Take 377, divide 610. Take 34, divide 55. Everything is 0.618.
Wow.
Try it now.
0.0111.
Okay. So if you as the number progresses, you get the relationship. Okay. So you try all of them. Okay, you see that almost everything will give you 0.618. Now we now said, okay, let's even jump. Okay, let's jump. Remember, we say this plus this is equal to this. This plus this is equal to this, which is 89 plus 144 is equal to 233. Okay. And then now we say, okay, let's use even 144. I mean, the result of this one now.
Divide 3,
You see?
I said to divide 3, still give it 1.6.
Yes. So let's even jump and go to the result now. Okay. And say 144 divided by 233 is 0.618. Okay. So now let's leave this phase. Let's go to the next phase. So the next phase, we say, okay, it was the first number we used to divide the second number. Now we now say, okay, use the second number now to divide the first number. You are going to get 1.618. So instead of saying 89 divided by 144, now say 144 divided by 89. You get 1.618. You do it all rounder, you get the same result. Okay. As if that was not enough, we now said, okay, since we've confirmed this too, we now said, okay, let's try creating a space, give a gap. Instead of 34 divided by 55, let's use 34 to divide 89. If you jump, they're going to get 0.382. Okay. Okay, so fine. So all these ones that we are doing now, what the result we are getting now, they are both retracement and extension values. And I will explain that to you shortly. So we did the same thing, do two step, you get the same thing. And then we now come to division and square root. So the answer that you got with 0.618 when you divided, you say take the square root and it give you 0.786 years of the gen. Okay. Okay. We say that one not do. Let's go to the next one. 1.618, take the square root, it give you 1.27. So all these numbers, what they now did, remember I showed you something before. Let's come to, perfect. So what they did now is this. You see this move, I explained something to you in our last class when I said A to B is 100%. That is as a person, your ability to move from point A, from point A to point B is 100. That is all you can do. And now you move from point A to point B, you have exhausted all your ability to continue to move. So you stop. You cannot move again. Okay? So now you have stopped. In order for you to be able to move again, you need to take a rest. And I said that rest is your retracement in the market. Okay? So when you start resting, remember all the values we have. All the values we have in that calculation, some of them are retracement values, some of them are extension. Anyone that the percentage fall between A and B is a retracement value. So 0.618 times 100 is 62%. 0.382 times 100 is 38%. We didn't need to do for 50 because 100 to 0 is 100 divided by 2 is 50%. So the midway, we know that the midway here is 50%. But aside this 50%, which is automatic, every other value here comes from those Fibonacci sequence. Okay, is that clear?
Yeah.
Now, so any value that is from 0.382 to 0.86, all these values that we got in those ratio calculation, they are all retracement levels in the Forex market. Okay, then anyone that the value is above 100 is extension, because now it's not more than 100. So 1.27 times 100 is 127%. 1.18 times 100 is 118%. 1.618 times 100 is 162%. So everyone that is above 100, anything you see 1 point, 2 point, 3 point, they are all extension level. Then anyone you see 0 point, 0 point, they are all retracement level. So like I was saying, I said when you move all your ability and you got to B, and then you start resting. When you start resting in the Forex market, it means you are retracing, you are gaining enough energy. Now, this resting now, as you are resting, you know you will be coming down, right? You'll be coming down, your ability, you are not moving again. Okay. So you come down and come down and come to 38.2 level. That means out of 100% ability that you have expended, you have been able to rest, 100 minus 38.2. 100 minus 38.2. That's 60 something percent. So you have been able to rest 38%. You still have 60 something percent to go by the time you get to 38.2 level, right? But now this is the magic of the Fibonacci. Okay. And I say this is where you need to cash, because this is where the banks, they make their money. This is how they use it to make their money. Okay. So of all the tools in the Forex market, there is no tool as effective as this Fibonacci. No tool. Okay. When the market move from point A, remember your point A is 2 candles to the left, 2 candles to the right, higher than center week, right? Your point B is 2 candles to the left, 2 candles to the right, lower than center week, right? Now, you now start moving back, and then you go to 38.2% level. At 38.2% level, you now see 2 candles to the left, 2 candles to the right, that is higher than center week. That means you now have a support around the 38.2%. What this market is telling you, what this Fibonacci is telling you is that you see this red for red, blue for blue, green for green. If the market retraces to 38.2, 50, 61.8, these 3 level, when the market wants to extend, it will extend to 161.8. Do you see how you can determine your take profit? So when you are entering the market here at 61.8%, you should put your take profit at 161.8%, close your computer, go and sleep.
Wow.
Any day the market get there, automatically it closes your profit for you.
So are you telling me that market will not come back below this 160, like 62%?
Nah, not what I'm still going to show you. So it's not in this model, it's in the next model. In the next model, there are 6 ways the market can move from this place to this place. From there, from this retracement level, there are 6 different type of approach that the market can use to move from 38.2 to 161.8, 50 to 161.8, 61.8 to 161.8. There are 6 different ways. By the time you see those 6 different ways, when you come to the market, you will see it. So if the market, because now there's what we call ABCD, capital ABCD. There is another we call sub A, sub B, sub C, sub D. That is small a, small b, small c, small d. So inside your big A, B, C, D, you can get another small A, B, C, D. So this is your A to B. It can be small a, small b, small c, small d. Small a, small b, small c, small d, until you get to your capital B. Because the A you will get in 1 hour time frame. Before you will get to B in 1 hour time frame, your 5 minutes time frame would have done ABCD, 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 plenty. Your 1 minute would have done ABCD, 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 many, plenty of them. Because inside your 1 hour, there are plenty 1 minute, there are plenty 5 minutes, there are plenty 15 minutes, there are plenty 30 minutes. In the same vein, inside your 4 hour and daily, there are plenty 1 hour. You understand? So the most important thing is for you to know that when the market retraces to any of these three, red, the market will extend to red. And that's why you see this arrow. Retracement to this 3 level, extension will go here. So if the retracement comes to the blue level, extension will go to blue. If the retracement comes to the green level, extension will go to green. Remember, I said we want to trade only C to D. We want the market to form A, form B, then we wait for the market to form C. And I'm saying that time the market is moving to form C, that is when you also will now look for drawing your trend line. So let's just quickly jump to the chart and see an example. So let's take any chart. Just any chart. Okay, just even this one. This is my trade that I'm telling you that is wrong, that I don't think is correct. So you agree with me that this is the highest point, right?
Mm.
And then the market came and creates this, right? And then the market now goes back, but remember, I didn't get to the highest point again, right? So let's zoom it out a little bit so that it will be clearer. So this is your A, this is your B, and then the market went to locate C, right? So if you pick your Fibonacci 2 and draw A to B, yeah, right here, A to B. Now, can you see how the market came to, the market just pushed to 78.6. And we said in our training just now, we said, if the market comes to 78.6, where will the market go? 1.27. Okay. So now that the market has come to 78.6, as the market is going down, we expect the market to come down to 1.27.
Wow.
So you just take your trade from here, put your
Like a
take
cell,
profit
yeah?
here.
Mm.
Yes, a sell. This one is a sell. Put your take profit here and close the computer and go. Wait. So now, one thing you can do is this. Now that the market has hit, so another way you can also know that the market has changed direction is this. You draw, the market did this, and then you see that the market is now going back. And then you put your Fibonacci on it. Remember, I said the Fibonacci, if I take it out like this, you are not seeing anything here, no line, right? That the Fibonacci is kind of imaginary. You are not seeing it with your naked eyes, okay? But when you apply it with the tool, the Fibonacci exists there, but just that it's not visible to your naked eye. So, but can you see that? See this Fibonacci line, the market break this one, break this one, break this one, break this one. But look at this one. Can you see that after breaking this one, the market came back with a strong bearish candle? And in this time, in fact, it break above the 61.8, approach your 78.6, which is the level that we are considering right now. Okay, break this level. Now, if you want to go by this, you can say, oh, the market came and hit another block here. This, you can call this other block. Okay, this candle. You can say this is other block. The market came hit the other block at 78.6 level, and then the market starts selling. So aggressive. So people that trade with Fibonacci as a tool, they are not doing it the way we are doing it, right? There's what we call power fee. There's a tool called power fee. It's only MTI that has it in the world. Okay. That tool will automatically, as soon as this market hits this level, the tool will automatically place a trade for you. And as the tool automatically places the trade, it will automatically place stop loss here and automatically place take profit here. Automatically, you don't need to do anything.
That's the support then.
Where?
So some to candles to the
This one?
current shows.
Yes.
That is the problem.
Yes.
Meaning that the market might likely
This market has not closed, meaning that the market might likely buy. Yes. That's why I have this buy trade here now. You see, I have a buy trade, believing that the market will buy. But even the buy trade, I not to trust them again because no, this is 4 hour. Okay. I'm not even the confident in that because I still see, yeah, this is a hammer. I still see that the market is going to realize the Fibonacci. From what we are doing now,
Fibonacci now, it means that
the market will sell. We sell, yes. The Fibonacci is more powerful than anything in the market. Yes. Yes, it's more powerful. You understand? So if you like, for instance, let me show you another place. Okay, let's do something like this. Let's switch to say GBP USD.
Yeah.
Let's say GBP USD. Okay. And then let's say,
This AUD USD.
okay, this is AUD USD. Okay, it doesn't matter. Anyone is fine. Okay. So look at this. We want to look at this market from this up here. From this up here. Okay. And then you see the market. Let's expand it a little bit and then move it to that place. So this is the market. Okay. So after the market formed this support, the market came down. Look at this resistance, this support here. The market came down and broke this support. Don't worry, I'm going to explain this to you again because this is another concept that you need to know. Okay. So now, when the market breaks this place, we say this point is your A and this point is your B. Okay. So this lowest point is your B. This point is your A. Remember, by breaking this place, means that the market has taken out to this low. Okay. So you now apply your Fibonacci from this top here to this wick here, the bottom, and then wash. Look at this place. You know when this thing is happening, when you are doing this thing now, this market is somewhere like this, maybe somewhere here. All those arrows, they've not formed, right? So now, when the market gets here, you see the market has, with this candle, this candle, and this candle, with this big candle, this is what? This is evening star candlestick pattern that I talked about before we started. Okay. So when the market formed this evening star for you, what you will do is aggressive people can just enter here. But conservative people will say, no, this candle is too big for me to take a trade. Okay. Conservative people will say, okay, I will wait. If the market pull back, I will enter. So it's either you want to use this place as your reason for entry, which of course, look at it. Yeah, they are all resistance. So the market come back to this place, you can enter so that you can have a good entry. Or you just sell the market with that candle, which will still be to your favor, but just that will give you a little brother. Okay, but now, when you sell this market at this point, you come and put your stop loss above the A, compulsory. Your stop loss must be above the A. And then you now put your take profit at 161.8 here. Put your take profit here. And then the market start moving small, boom, 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 boom. Oh, that's it, your take profit. You didn't know that the market will come this way. It's the Fibonacci that told you that, hey, put your take profit here, the market will get there. Can you see that as soon as it hits this take profit, the market do 2 candles to the left, 2 candles to the right, form a support. So when the market hits this Fibonacci, okay, this is your take profit, right? You have closed your trade. You are now going to move your Fibonacci now. This one now will not come here. This one now will not come here. This is now your new A. This is now your new B. Then you're now waiting for the market to come to any of this level and give you a trade. So now, watch this. Watch this. The market starts coming back. It came here. Okay. This is 38.2. This is 50. This one didn't really get to 61.8. But now, sometimes the market can be so funny, it can turn around here. The market can even come all the way to this 78. Now, for us traders, we prefer 78 and 86. Because when the market comes to this level, our stop loss is very small. But then the market comes to like this, because your stop loss must be above the A. Do you understand? If you are going to place your stop loss anywhere in between this A and this B, is at risk. The market can come and take it out. So you see how the market did all this movement to and fro. It came to, look at it, 61.8. Look at it here. Now, because the market comes to this 61.8, when the market gets to 61.8, you can put your trade here, say, sell. You can even put sell limit in 61.8. That is pending order. You can put a sell limit and say, any day when the market reach there, put me into the market. Okay? You put a sell limit there. As soon as the market comes, then that sell limit order become active. Automatically, your stop loss is above the A. This is your stop loss from here to here, which is like 330 pips. That's your stop loss. But where your take profit, 61.161. Look at it here. So you put your take profit here, 161.8. From this place, your stop loss is 330 to this place. See your take profit. Your take profit is 957. That is like ratio 1 to 3. 3 times your stop loss. That's your profit. Hanson, is it clear?
It is. I'll go through the class again.
Okay. So you do that, you stop. Then next, after this one is done, you move the Fibonacci again. Okay. Move it now. So that this one now becomes your A, and this becomes your B. And then you wash again. See the market come to 61.8 again. Right here. You put a sell. Okay, and then go to 161.8. So this market is still active, it hasn't gotten there. Okay. You can see the market is still selling, it has not gotten to once. But if you look at it from here, if you have sold from here till today, if you have sold from here to where the market is right now, that's 735 pips already. If you have even come and say take your take profit from here, that's about 1,100 pips.
Mm.
Okay. So that's the beauty of the Fibonacci. Okay, and this is now I hope it's not confusing to you.
Not really. I have to go through it again.
Please
I'll
do. Make sure you
I'll
understand it.
I have
Make sure you
to
understand it. Okay.
yeah.
All right. So now let's come back. Was it okay? It looked like I was pressing back. Okay. All right. So now this is the examples on reach chart, right? So we have
Mm.
talked about the levels, and then we'll now look at it on reach chart. 2 candles to the left, 2 candles to the right A, 2 candles to the left, 2 candles to the right B, 2 candles to the left, 2 candles to the right C, and then the market goes to D. Look at your D. See, red to red. It came to one of these three, 38.2, 50, 61.8. So if you find your C in this red area, put your take profit to 161.8, which is the corresponding red level. Okay. And you see the market, it moved and eventually got there. Okay. And this is just a demonstration for you how the market come to see. Then the market come to the blue level, it will move and go to the blue level. Look at it. A, B, C, and it goes to the blue level. Look at it. Sorry, yeah. I'm talking about this one. Yeah. Okay. Then this one is a set trade. It's A, B, C. Red level goes to red level. Okay. A, B, C. Blue level goes to blue level. Okay. All right. So look at it. They call it natural levels of support and resistance. Fibonacci. Natural. Can you see why we are showing you those plants, showing you human body, showing you why this number is effective in this natural stuff? So they are called natural level of support. So you don't see them with your naked eye, but they exist. The only way you see them is you applying that tool on your chart. Now let me show you how effective that tool is on your trading view. So if you go to trading view, open trading view, let's see. It's more powerful on trading view. Now this is not MT4 now. This is another platform called trading view. Okay. All right. So with your trading view, I just switch to the daily chart. Daily chart, GBP US, okay. Right there. So let's even compress it to the lowest. Let me use the bigger chart that will give us so let's take 1 month. Let's look at it on 1 month. Okay, beautiful. So this is 1 month chart. 1 month is too 1 month is too far. Let's see. Okay. Okay, we can do with it. So let's look at it on this 1 month chart. So look at this 1 month chart. Now you see how this market fell all the way from here. Let's take horizontal line. Horizontal line. So you see this horizontal line here and here, right? See this too. This is A, this is B, right? And then we'll say if you apply this Fibonacci. Now I'm going to apply Fibonacci that put both the retracement and the extension level for you. So if you take this and say Fibonacci year to year. So as you apply it like this, you will see both the the retracement level and the extension level. So this one's to the back like this at the retracement level, and then this at the extension level. So you see the extension level. You see uh um 1, 120, 1.27, 161.8. Okay. Then 261.8, 361.8, then 436. So just like this, my own. Let me show you. So it takes a lot of work to do this, but a lot of people may not know. So if I show you my own Fibonacci now, look at it. So if I just take Fibonacci and drag it here, you see all those levels. Can you see them? You see 161.8, 200, 224, 261.8, 314, 361.8, 423.6. Now, so ideally, if you do something like this, let's say this market that has moved, what do you call it? AUD USD. If you come here now, just take AUD USD, apply this to this. Hmm? Can you see this market? This market is eating 423.6. Look at it. You see the long time it took. This is your A, this is your B, and this is your C. This drop is all the way to, see when it hit 361.8.
Mm.
You see that? So you can you can just apply, you can do something like this, right? You can just apply this Fibonacci on your chart like this, okay? And then these levels, on your chart, let me do it so that I can cover the chart. Let me use to cover the chart so that I can see it. Can stretch it to cover the chart. So these are the levels now. So now you can do this and say these are natural levels on your chart. Imagine this, look at it. The market just came here and sold. You see how effective that one is. See this one, the market break this, tested it, and then sold. Why? Because they are natural level. So if you switch this chart now from daily to say 4 hour, okay, see how effective this is. The market came here, immediately got rejected, and then now you all this wins.
So you can actually trade from here to here.
Yes, you can trade year to year as a boundary. So look like this one now. From here now, the market came all the way to here. Break this one, went to this one. Now this one reject and you couldn't break this one. And this one is selling. Do you understand? So you can even do something like this. See this one. Look at this one. Hit this one. Now be all this 7 in a second. You see that? So you can actually do it because these levels they are there, but you don't see them with your naked eyes. Except you know how to draw this Fibonacci tool. You put it perfectly well, and then can give you this kind of result. The higher the time frame, the better. So if you come here and say weekly, so what to normally do, ideally as a trader, what you want to do as a trader is you want to come to either weekly or monthly time frame, okay? Then apply the Fibonacci on your chart. So let's take weekly, for instance. The monthly is not clear. So take the weekly. Let's say this is the highest point on the weekly, right? So that highest point, now let's zoom it up a little bit and pull it here. So this higher point now, we say this is your A, this is your B. So if you draw Fibonacci here, from this point to this point, yeah, you see how the market came back to 78.6. Okay. And I say once the market do this, the market will naturally come to 127.2. Can you see how the market fell? Pam, 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 pam. Look at it exactly. 127.2, and then the market pulled back.
But now without the colors.
And this is MT4. This is a different platform.
But it's easier with those colors.
It's easier with the color. And so if you want to use the color, you need to tie your account to this thing to TradingView. You can log into your account here on this TradingView, and then you can use the color. Yes, it makes it easier. Okay. This one that I'm using to teach you now, this this one is there's a software called um what's it called? Automate charting software, but they've discontinued it, so they use what they call Smart Trader. So if you want to get Smart Trader access, you come here. So it's a product of MTI. Or let me just log it to it for you. So come to MTI Smart Trader. Smart Trader.
This one.
Yes, it's
MTS Smart Trader. That one will be different.
okay. Now this one. This one. Smart trader. Okay, so now you need to sign in. It's not free, you have to pay for it. And you pay for it every month. Motorcycle, 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 motorcycle. Next. And then get to try it. Motorcycle, 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 motorcycle. Okay. So, so if you come here, chat. So this one, if I show Hanson this one now, Hanson no go gree do anything again. Hanson
We
no
are see we I'm just being patient, doing what I can do, just to learn what I can learn. But the main setup, we that one you have to go through it too.
okay.
You say
So
I've not been
let me
disturbing you.
just shock you with this
I
one.
just want to do
Let me
knowledge,
shock you
just
with this one.
do
So
knowledge.
this one is smart trader. Okay, this smart
Okay.
trader, when you pay and you log in, there are some
Mm,
level of access that you give you. So you see this thing you are seeing here, these
mm,
things, these things. Now they are key tools. This one is candlestick tool. Okay, that you
mm,
can change from different type of candle you want. Then this one, everything that you see here are called smart tool. Like this Fibonacci now, smart Fibonacci, I just come here and say, give me smart Fibonacci, I say apply. Once I select, okay, I've selected the right. Okay, okay, so this is the one I'm used to teach you. This is the color, right? Okay,
mm,
but now let me remove. So now you can tell this system to apply the Fibonacci for you automatically. Let me
okay.
see. Smart fib, yes, smart fib. Okay. Maybe it's not showing because my this thing is free. I'm supposed to have another tab here. Okay,
Yes,
wait.
see the smart pattern.
Smart
Oh,
fib.
step. Step.
Yeah, okay, that's the smart fib. Yeah. So this one, once I click, if I click, eh, it will
Mm,
draw all the Fibonacci for me
Automatically.
automatically. Yes. You see now, I didn't go and look at it as identify A, it identify B for me. Can you see that?
but you have to click on
You have to click on
on a
smart.
candle.
Yes. Yes. So once,
On a
so
candlestick, I mean.
you need to select. So the way it works, you need to on your own. Now, remember with that I say if you compress the chart, you see the lowest point. So
Mm-hmm.
you need to be able to select the lowest point or the highest point, you know,
In the chart.
yes, in the chart, and it will apply the Fibonacci for you most accurately. You understand?
Mm.
Then this one, there are a lot of tools. I'm not going to be able to take all the tools, okay, right now, but let me, sorry. If you come and say smart support, for instance, smart support, if you
Mm-hmm.
click on smart support, can you see it just apply all the smart
Mm-hmm.
support for you? If you click on smart resistance to apply all the smart resistance for you. So the way it works, like I told you, it will only pick the support and resistance that you can see when you are standing in front of the chart. It will not
Okay.
pick all the irrelevant ones, the
The
ones that are
ones
not necessary for
behind.
your analysis.
Yeah.
It will not pick
Yeah.
them. It will only pick the ones that are required for your analysis. Those are the only
Mm.
ones to pick.
Mm.
You
Mm.
understand? There are a whole lot you can do with this thing, a whole lot. All this thing you are saying. See this, if you want to draw head and shoulder, you want to draw the king's crown, you want to draw your ABC, AB, you want to see this math to everything. All your pattern, you can do them here. But
So how much is it?
this one require, you say,
How much is this tool? That I'm not going to
I used to
request it
pay
because
$129 per month. I don't know how much it is now. Let me see. Marketplace. Okay, wait, I can go to, yes, okay. Let me take this
When
one
I'm
first.
done, I know I've built my confidence back, then we'll get into it. Mm.
I'm trying to pull the screen up.
Wow. And it's so accurate.
Yes, it's very accurate.
Mm.
Very accurate. If you go to something like maybe 1 hour chart now, see 1 hour chart. See like this 1 hour chart now. If I let me do that smart tip for you in 1 hour chart. So if I come here and I say, oh, this one, smart flip. Then I come here, I pick this candle and say apply. Can you see all the Fibonacci? Look at
Mm.
it. So perfect. See this first one.
Different zone.
Come, you see?
I
So
say
now
no from
as we speak
different
right
zone.
now, as we are speaking right now, it has identified the present A and the present B for you. So what you are waiting for now is for this market to come to C. So your
Mm.
C is any of yeah. So if it comes to any of this level and gives you a candlestick formation, you buy.
Then you can take a buy. Mm.
Yes. So with this one, you are not struggling to draw the Fibonacci. Your Fibonacci is accurate. Let's even say we want to see past Fibonacci. Let's say we want to see what happens here. We can come here and say smart fib, then come pick here, pick this thing, and see how the Fibonacci plays out until the market changes direction. Can you see that? The market
Mm.
came down like the pam 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 pam, and then market changes direction. Now it's buying. So even with this one, once you see that the market has created Fibonacci 1, Fibonacci 2 going up, you already know that the market is in a buy. So you look for buy to enter. I'm not even going to struggle with myself to even say, okay, let me be too accurate. As soon as I see that it has created, like look at this now, it created Fibonacci 1,
Mm.
Fibonacci 2, it tells me the market is selling. Yeah, it created Fibonacci 1, this small one, and this one, it tells me the market is buying. So you just look for a comfortable place to enter the buy and stay in the buy until that day when it will tell you the Fibonacci is now a sell.
That's when it start coming back down.
Yes, when it
Or when
start coming back down. You can actually see, so let's click, you can actually see all of them. You can see how it has moved in the past. Let's change the currency pair. Let's change it to say Euro USD, for instance. Okay, look
mm.
at Euro USD now. This market that is selling now, you could have actually done this. Could have actually done this and say, okay, let's sorry.
They say the market is almost straight.
Yeah,
So
so
it
now look
breaks
at this
the
now. If you pick your smart fib here and say Fibonacci, yeah, let me see if I can. Okay, all right. Let's clear the screen and then see, let's see your horizontal line. I don't usually use this. I think I'll need to come and see if I can tie my account to this place and see if I can be trading from here
it's
because
better. See,
it's
this is
very
more, yeah, it's more easier and
it's
it's
very
good.
accurate. It's easier to use.
And if you
Um,
are paying for it, why not use it? Or probably do analysis here, then go take the
yeah, you
trades
can do
on.
analysis here, then go and trade somewhere else.
Yeah,
That's
go and trade on the yeah.
horizontal line. Yeah. Okay. Then let's see smart fee. Can you see that? You see that the market see it
That
created
means
it.
right now one can actually do a buy. It's
And no,
created.
so right
Hmm?
now, it's telling you that the market is going to pull back. It's going
Mm,
to pull back. So you
mm.
are looking, the market is still selling. Sell has not ended. Okay. If sell has ended, so if sell has ended, let me do something. If I come here now and I say smart fig, okay, and then I come here and I say smart fig, you see there's no result. Say smart fig can be created. There is no confirmation fractal. Can you see that? Meaning that buy is not possible yet. So this is
Okay.
your A, this is your B. It's telling you now that this market is going to go to C, look for C. And your C is going to come from previous support level, like here. Maybe like this kind of place or this kind of place. Market pulls back. So for you now, the C is easy. These are the possible places where you will get your C. This red, 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 blue, green. Okay. So, and if it comes to any of this red, your take profit is going to be at 161.8.
Does this thing looks like a downward trend?
It's a downtrend now.
Mm.
It's a downtrend. Look at it. Currently it's a downtrend. And the thing has, carefully give you the A. So look at it. It gave you A, B, C here. It gave you A, B, C here. And then it has given you another A. This is the current A, B, C now. A, B. So now your own is to wait for C, then
And
sell
then
to
take a
D.
sell. Mm.
Yes. So once you get C, if you zoom this thing out like this now, the market will be clearer to you. Zoom it out like this. So this level, one, two, three, any of these four level, that's where I'm expecting to get my C from. Then now let me show you another beautiful thing that this
But it
market will do.
looks like it's coming low, it's forming lower low, lower low, lower low. So it might actually not get to
No,
oh
it must pull back. Don't worry yourself. It must pull back. If it doesn't pull back, it means your ABCD this thing will not work. Okay.
no.
Yeah,
Oh.
then now see another thing the market does for you. This thing, this two. Mm. You can come to this two and say, yes, it's a smart candle. Yes, smart. What's this one? Okay, I think it's here. Yeah, smart candles. So tell the market to identify for you all the all the bullish engulf or bullish shooting star or bearish. So like this one, the market is selling. So tell the
Mm.
market to identify for you the bearish candlestick formation. Say all bearish candlestick formation and just click. Okay. Wait, I think I'm making a mistake. Okay, let's take bearish engulfing candle. So click show me bearish engulfing candle. Okay. Let's see. Bearish engulf. Okay, let me see if what I'm saying is correct. Take it out. Okay, perfect. So you saw what happened now. Look
Mm.
at this chart very well. I will come here now and I say, show me bearish engulf. So I click here, bearish engulfing. The bearish engulfing candles will be highlighted. Are you seeing it? Look at this one. Bearish engulf. Look at this one. Bearish engulf. Can you see that? So
Mm.
now you are supposed to sell this market. You are supposed to sell this market from this candle. And this is, look at it.
Mm.
Can you see that?
Yeah.
Then look at this one too. You're supposed to sell this market from this candle. This one. And that's
Okay.
this sell. Can you
But
see
there's
that?
always a pullback. You see that small tiny what's it called? Candlestick. A candle wick.
Yeah. So
It
when
can
when so the thing is when the bearish, and that's why you too as a trader look at this one and see this bearish engulf. This is bearish engulf. And
mm,
area I can see that is a resistance area. But look at this
mm,
one, this one is bearish engulf.
mm.
And it's coming from a support zone.
Demand I
It will not
support.
it will not work. You understand?
Mm,
And see like this one now, bearish engulf is selling. The market is already selling, and then it now give you an engulfing bearish. That's like a
mm,
continuation candlestick. Okay.
mm,
You can go back now and say turn off the bearish engulf, and then you say turn on bearish argument. Anyone you turn on, that's what you'll see. Any of them. If you say turn up evening star, now if this now is on. So if you're not looking at the chart, evening star will now be highlighted. Any
Mm.
evening star that surface will now be highlighted. So this is one of the feature of this trading platform. It's a very powerful platform.
Smart trader.
Mm. It's a product of MTI as well.
MTI.
Yes.
Do they have are they brokers?
They are not brokers. They are just forex. They are education. They do forex education and then they also trade. They do signal service. The way they do that signal service is they have trading rooms where you can join and follow analysis on a daily basis and then take trade opportunities that are mature, that are ready to be traded.
Mm.
You can get live analysis. But then the problem with MTI is that MTI is very expensive.
How
Ve-
much is it?
Let me just give you an idea of the cost. Uh,
So if you join them, they'll be giving you signals.
it's not like they'll be giving you a signal. You will even be part of the class. You will guess they have signal group where they give signals. But for me, the signal group is not even too effective. The one that is most effective is you joining the class. So this is their website. So let me log into my own account.
MTI. There was one that I joined before. They were charging me like ridiculous amount of money. Something 100 or
Mm.
101 I be 100. No, I think it's 100. The guy is a Chinese guy.
So look at this. This is MTI. Okay.
Okay.
Now these
Mm.
are different courses. Okay. Now these different courses they come with different amounts. So if for instance, let's say uh you want to sign into any of this course, you just me, I've already paid for my own. So that's
Yeah.
why you can see that all these things are showing here. Any
Mm.
course that you are doing, the one you have completed will show under completed.
Mm.
Anyone that you have completed, once you click on it, you see it will be showing you, like for example, if I click on this course now, you see at the status bar, it will show you 100%. You see the status bar, it will
Mm.
show you 100%, meaning that you have completed the course. Dashboard. Okay, you understand? So now, and it comes with exams and everything. Oh. Okay, but some
Mm.
of them are trading rooms where you can you can you can easily follow the analysis, okay, and their projections. Like for instance, like this one now, this one is like a pro signal. This one too self is a pro signal. This one too is a pro signal. Okay, this
But
one
this
is
is a
more,
course.
yeah, but it's a course. They are all courses, but then
Mm.
they have the. Let me see if I can show you. For this course like this now, it is $800,
Are you for real?
and it's monthly. It's $800 monthly, not just $800 for life.
For one. For one
It's,
course or for all these
no, for
courses?
all. This one is for
Oh,
everything.
okay.
This
Oh.
one is $800. But if you don't want to do all this,
Mm.
you can easily go and select something that you can just take one course. Okay, you can take
Mm.
just one course. Let me
Like this
see.
elite trade or
Yes,
chief
early trade.
trader
Now this one is one. If you
basic.
click on this one now, it's one course. Okay, so if you come here, my own. Okay, let me see.
This one
Uh,
all locked up. Equity market, trading
yeah, this
technology.
because this one is not part of what I'm doing. If it's not
Mm-hmm.
part of what you are doing, it will be locked. But if it's
Mm.
part of what you are doing, it will be open.
15 lesson.
Mm. Let me see. I think it's under learning pathway. Let's see. So under this place now, you can come here and say you want to take this course.
Mm.
So if you click on this, it will take you to a place where we say subscribe. Let's
Okay.
see. No,
Okay.
I think not this one because I'm subscribed. That's why I'm showing like this. If not, ordinarily we see a place that will say subscribe. So when you click on that, you can now pay with your card. Then
Okay.
this course will now be available to you.
Mm.
So for me, I don't intend to pay monthly. I only
Mm.
just intend to use
Big
it to get,
ones.
yes, just pay
Mm.
once, get all the resources I need to get from them, and
And
then I'm off.
yeah.
Yes.
So that's a smart
So
move.
by next month, now my own this thing will expire.
Mm.
But this is the of all the courses,
Mm.
this is the most competitive course. Where is it? Ultimate Traders Package.
That's the one that is it 60 something?
No, that one is 19. I think I have 19. Is it 19 hours or 19 courses? Let me see. I've done it before. In fact, I've done it twice. I did
Wow.
it sometime in 2018, and I did it again in 2024.
I think it's all about continuous learning
I
and
did it in
refreshing.
2018. Then they uploaded it again for me in 2024.
Wow.
It's here now. This is the one that is expired. But when you finish it, they'll give you a certificate. Oh. But you
Ah,
have to do exam. The exam is, look at it, it's 19 hours. So
Jesus.
if you open it now, you see if you want to do it, you have to pay, look at the amount. So it's
That's
$4,995.
$5,000.
Yes,
Wow.
122 lessons.
Wow.
But you see, this course it will shape your trading future. It's because of this course that I did. That's why I can train Forex like this today.
Mm.
Yes, it's because of this course.
The
So
ultimate traders
now
package.
they have locked me because usually before it's supposed to be open because
Mm.
I've done it, I've passed it 2 times. Now that they
Mm.
have locked it, I believe they have upgraded their slide content. That's
Okay.
why they have locked it now. This
Mm.
course, as at 2018, it was $10,000.
Mm.
They've reduced the price to 499, 4999.
Wow.
Yes. So all these tools are things that once you are done, you need to come up with something that you can look at and say, okay, today I'm going to trade or I'm not going to trade. Okay.
I've
It's
not
it,
started trading still, though.
but
I've
you
not
are trading before now.
started trading. Yeah, but honestly, I lost my confidence. That's the issue I've been
But
having.
with what we have
Like,
done now, you can be trading demo now. You can not live now, you can trade
I
demo.
don't even know why I don't know if I can open the demo. If I want to open, I went to my MT5 and I
Mm.
tried opening demo there. I don't know what happened though.
It didn't open.
No, I went to I setting a new account now. Abi, is it no new account? I don't know.
You go to if you want to create. Are you doing it on phone or you are doing it on computer?
No, on phone for now.
So on phone, it's easier on phone now. All you need to do is just to go to this. You say create. When you say when you click on
New
the top of
account.
the M4, which phone are you using? Is it Android or iPhone?
iPhone. iPhone. Oh, let me
Okay,
see.
iPhone. I don't really know how the setting is on iPhone, but on
This.
Android,
Let me send the
which
screen.
I think is supposed to be close, is for you to go to. Let me just see quickly. Okay, so when you open that your
I
what they
just
call
sent see it shows a new account. I don't know if it's new account or I'll have to go to yeah, it shows there's a new. It shows new account.
Okay, so okay, so you click on that new account. When you click on that new account, you see option for demo account.
It's showing me, there's no demo. It's showing me um empty, okay, meta quotes and my VT market limited. That's it. Oh, no, that's all it's showing
Send
me.
me the screenshot. Send me the screen. When you
I
touch
just
on
did.
the account, then send me the screenshot.
I just did. Okay.
Okay, no. So click meta quote. Select meta quote.
Oh, okay. Okay. Mm, I don't even know how to open a demo account again.
Yeah, just select meta quote. It's showing you this too. Like it looks like you open account with a VT market before.
Yeah, no, I'm still with VT markets.
So that's why it's showing you that. So
Mm.
for meta quote, just create a demo account
How
direct.
much deposit should I choose? 100,000 or
You have
500?
what do you have there?
500,000 GBP.
500,000 or 5,000.
500,000 GBP
Okay, you
deposit.
can take it now.
That's the
I
one
take
I'm looking at.
take it now. Take the 500,000. It's fine.
Yeah. Accept. Okay. Mobile number. 7964258. Because I really need to be practicing as well. It's saying Forex. Okay, yeah. Forex hedge GBP. Okay, that's fine. Okay. 1447927964258. Okay. Do I need a server?
So yeah,
Is
so
first
the server is automatic now.
uh
It's
meta code
automatic.
demo. Abi?
What is it showing? What is this? Is it
It's
showing you list
showing
of servers?
yeah, it's showing me meta code. The password, can I change it? No?
I think you can, but not really necessary.
Okay, let me start.
Process of changing meta trader password is very long.
Okay, okay. I've opened a demo account. Let
So
me
now,
see.
can you see all the currency now? Go
Yeah,
to the chart.
I can see odd card. It's just odd AUD JPY New Zealand, that's all. Let me go to
So
quotes.
now you go to quote,
Mm.
go to quote, then you
Mhm.
see a plus button at the top. Touch that plus button, you
There's
will
no
see
plus button
list.
under quotes.
When you click on quote, you didn't see plus button to your right hand side.
Let me show you what I'm seeing when I click on quotes.
Send what you are saying. Let me see.
It's not showing again. That's where you can add new.
Yes.
Yeah, it's not showing. These are the only things
Okay.
that
No, I think they've updated it. So touch those this thing to your left, eh?
the
Touch,
icons.
touch that icon to your left.
I did.
Okay, so if it's not showing there, now
See.
see that place where you say enter symbol to search. Just type any symbol there.
Except that. Okay, so it's showing Forex. Oh, okay, okay. Yeah.
Okay.
It's under symbol. Okay. I saw you trading. Is it Boom?
Boom and crash, yes.
They trade weekends.
Yes.
Mm.
All right. They don't have break.
Mm. It's just
365
like
days.
what's it called? These people. It's just like this. I remember their name. Euro cloud. Jesus Christ.
So this is the
Crypto. It's just like
yes, it's
crypto.
like crypto, yes, correct.
Mm.
So let me so like this is FSTM, right? You see
Mm-hmm.
this my screen now. This is FSTM. Now this FSTM, this is MT5. You can see 3D systems all the way. This is let me see,
3D system. What does it mean?
it's a company, I think it's a US company.
Uh,
So this one you have everything. So what you do, if you come here, if you click on this arrow and come down here, can you see Forex,
yeah.
exotic minor major? Then
Mm-hmm.
you can see spot metals, right?
Mm. Yeah.
Now see United States stocks. All
Okay.
these are United States companies that are listed.
Mm.
Then Hong Kong stocks. All these are companies from Hong Kong. Then Japanese. Then indices. Under indices, you have several other stuff inside. I think
Mm.
they try to unify this indices stuff.
What's the meaning of CFD?
CFD is um, let me check. I think it's
I always see CFD. CFD sound like I really don't.
let me just
Mm.
double check 1 minute.
Japanese CFD too.
Mm. Okay.
CFD. JPY. Ah, it's gold in a different place. I'm not seeing gold here. USD card.
Okay, make contract for different. That's the full meaning.
Mm.
And I think it's just a term that's
Mm.
used to describe
Alright.
assets, that you are trading.
Okay.
Yeah.
Okay. I'm always saying it. Do you trade GBP card or GBP odd?
I trade anything that is on the chart I trade. I don't have preference.
Mm.
Yeah. Like I told you, the knowledge is the same. So if I see a trade setup on this, for instance, Western Digital, if I
Mm.
see a trade setup here that favors me, I'll trade it. So, in as much as I analyze the thing and I think I'm comfortable with the analysis, I can trade it. I don't really select like that because
Mm.
the idea is one. The knowledge is the
There
same.
are some market that don't move at all.
Yeah, so you need to identify those. It's not so the key thing that you look for when you
Mm.
want to make a choice of what to trade. It's not really whether the market does not move, it's the spread. Because when you enter the trade, you want to try to overcome the spread before you make profits. So
Yeah.
if you go and choose an item like here now, if I come here, if I say show spread, yeah, I can add spread to this thing so that let's see spread. Now you can see the spread. Then look at all the spread. Okay, see this one. Imagine see
Very high. XAD
this one.
euro.
Let's
That's
say
just what I was about even pressing self.
look at
I
it.
just type
So
Jesus
imagine
Christ.
that for you to start making profit, you need to first of all make 21 pips first before you start talking of profit.
So XAD USD is the cheapest, is the easiest of them all.
SAD USD is simple. This one is just
47.
four
Yeah.
point. It's just 4.7 pips.
Oh,
This 47 is points. Divide it by 10. Anything you are seeing here, divide by 10 is your pip.
Jesus.
So imagine some that have up to see this one, see this one, see USD SEC, see
What?
USD knock. So you can where
It's
do you
so
want to make
fast.
200 and something? Yes. All these ones
Jesus.
now you run from all this kind of pairs. Okay. If you look at the major pair, you see that
Jesus.
their spread is very small.
Yeah, it's very small.
Yeah, you see that. So that's why you need to focus on them.
Mm.
You see something like GBP USD. Now look GBP USD 3.8. Look at the 1.5. It's
Mm.
very small. So you can confidently take a trade of of
This
even one lot
blue,
on
yeah,
GBP because you know your spread is small. Whatever they are
small.
going to take from your account and spread is going to be very minimal.
Mm.
Okay.
Mm. Do you
All
trade
right.
anything on indices?
Sorry.
Do you trade anything on indices? I think I've seen you
So
trading Nasdaq before.
one way you can identify those stuff is let me
Mm.
just quickly show you on your trading view. So if you come to your trading view and then you click this place, so this is how you know them. These are stocks,
Mm.
funds,
Mm.
futures,
Forex
forex,
and
crypto,
indices.
indices.
Mm.
So when you click on indices, look
Mm.
at look at
You only
indices.
have four.
Yes.
It's more than 40 something here on my own this thing.
It depends on the source. They're showing you four because I
Yeah.
type GBP USD. If I delete this GBP USD, it will show you more.
Mm, okay. Yeah.
Okay. That's
Mm. Mm.
okay.
Mm.
So, all right. So let's see. So all this, yeah. So all this fall under indices is a lot.
Yeah,
Okay.
it's a lot. Many.
Yes. Nifty, dollar. Okay. So basically, they're all the same thing. So just get the knowledge, finish. Once you
Mm.
have the knowledge, you can trade anything. So for the boom and crash that you're asking, so I
Mm.
just log into that account quickly so that you see.
Is it
So
under indices or is it just
no,
under?
it's tied to just one broker, Deriv. See the name of the broker, Deriv.
Okay.
Yeah, so you need to create an account with this broker. I think they
Mm.
have a branch in the UK there.
Yeah, you
Create an
said
account
so.
with this broker, then you can trade all their instruments. So these
Mm.
are they have volatilities. Now they have even increased. See now today they have 289 instruments you can trade from. When they started, they only have like 21 instruments. As at 2017, if at 2017 to 2021, they just
Mm.
have very few instruments. It was recently that they now added all these plenty instruments that
You
you're
mean
seeing.
all these things are instrument all this volatility, they are all instrument you can trade.
Yes, you can trade. Yes, this volatility 10 is an instrument.
73
All of
spread.
them are instruments.
Oh.
Volatility 100. But the one that makes money the most out of all of them is volatility 75. This one. This one has
3,000.
this one has
That's
very high dollar per
very
pip.
high spread, yeah.
It makes
That's,
a lot of money. But the good
that's,
thing about their spread is that their spread is tight. When you enter, it's
mm.
very tight. Their spread is very tight. Okay.
Ah, well,
All right. So
mm.
thank you for your time.
Well, thank you very much, sir.
So I will
I'll,
let you know when the next class will be. Let me see
yeah.
what I can do before the end of the week.
Oh, okay, sir.
I will let you know.
Okay. Thank you very much. At least I'll start this demo trade with this whole analysis. I'll
Okay.
probably be giving you what's it called? I'll be giving you updates.
Yeah, you can take a trade, you can send me, you can screenshot and send to me.
Yeah, just for at least for correction, or maybe we could use it to also learn or
Yeah.
analyze. Yeah,
Okay.
that's nice.
All right. Thank you very much.
Thank you
Have a
very
good
much, sir. Do have a
bye.
good night. Thank you. All right.